Hi there everyone, my name is Devansh. I welcome you back to the channel, and this video is specifically catered to the students taking the exam, or rather the management case study exam or the gateway case study exam in February 2022. So if you see on our channel, we have already uploaded the first part of the pre-scene. It's already available on the channel and I'll put it up on the screen. I'll just leave it in the I box above, so you can access it from there if you haven't seen the first part of our pre-scene. If you have, this is a continuation of the same, and this is the larger, longer part of the pre-scene, which covers the entire explanation word by word, line by line of the actual CIMA pre-scene that has been released. So this video will go through the entire details about the company page by page. Then we'll do an entire financial analysis, and all the financials will be broken down, presented to you in a simple and easy way. So this video covers a very important part of the case study, a very important pillar of the case study, which is to know your company well. And if you know your company, the name of the company given to us is Frinta. If you know the company well, you can, or rather you've taken a large step in the right direction towards passing the MCS exam or the gateway exam in February 2022. So we have a free mini course that is available as well for our students. The free mini course is something that gives you access to the PDF file of this entire pre-scene, which you can print off, which you can keep with yourself. It has free mock exams, it has free revision material, it has free, an introduction to the ICANN statements. Everything is available for free in our mini course. We want to help as many CIMA students as we can, and that is why we create and make the course available for free. The link to this mini course, we leave it in the description box below. You just got to click it and enroll for it. It's absolutely free. You get all the material direction which helps you understand what this exam is about. Without further details, or without wasting any time, let us simply start with part 2 of our pre-scene analysis. Welcome to part number 2 of your pre-scene. In the first part of the pre-scene, what we did was understood about our company, what our company is, what our major products for our company are, the company's background, how the company's been working. All of that was presented to you in part 1. Before you start with part 2, please make sure you are very sure on the material and very comfortable with the material in part 1. Yes, you will have many opportunities to go through the pre-scene over and over again. But when we are starting a new section, it's best to have good knowledge and be comfortable with the ideas in part 1. So where we stopped in part 1 was where they were explaining what a smart speaker is like, what the functions of a smart speaker are like, and then they brought in the Frinta smart speaker as well, and then we ended our first part of the pre-scene. I'll pick up exactly from there and I'll continue. After that section, they're first giving me YP Burn, Frinta's rival in the smart speaker market. So we are speaking about our rival in this market, in only the smart speaker market. So the market for sophisticated smart speakers was created by YP Burn. It was created by them. They were the pioneers. They were the people who started a product known as a smart speaker, and people were, accepting them because it was a new idea. It was launched in 2014. YP Vox was the first product that offered effective voice control with artificial intelligence, but enabled users to speak naturally. So YP Burn is the name of the company. YP Vox is the smart speaker that they have introduced. It also introduced the ability to distinguish user voices from any background noise. So the features of the smart speaker were first pioneered by this brand in 2014. YPVox was primarily intended to act as an electronic hub within the home, which means it's one area that is able to control other aspects of your house. It's the smart speaker at the end of the day, right? So it was created for the smart homes market. Users would be able to interact with their smart speakers in a variety of ways, using an activation word such as Vox to distinguish instructions to the device from background conversation. Which means you just had to say Vox and the speaker goes into life, and then you can ask any question or make the speaker play anything, or it just comes to life when you say the word Vox. For example, updating schedules and lists. Vox, Tom has a doctor's appointment at 4:30, so Vox will save it and it will go in the to-do list. Conducting basic internet searches is also possible using the smart speaker. So they are somebody who have pioneered this market, so it's very logical to think that yes, they're going to be a major market player in the smart speaker market. Even if you wanted to do some online shopping, you could say the word Vox and ask them to buy something from a store where your card number and your details and all of that is already stored. That is possible. You can operate other smart devices as well. For example, if it's a smart television or smart light, you can do it by instructing Vox. You can turn it on by instructing Vox. So users enjoyed the facts that their YPVox smart speakers could simplify their lives in many ways and without having to struggle with complicated programming and installation. So the major job of bringing these speakers into the market was to make the life of users easy. So, in this quick comparative product analysis until now, we understand that the difference between YPVox speakers and our speakers is very little. In the first section and towards the end, we were speaking about Frinta's speakers, what Frinta speakers can do, and we are going to speak about that a little bit deeper into the pre-scene as well. But up until now, we have understood that smart speakers at the end of the day are smart. They're going to have overlapping competencies, overlapping abilities, and that's what we found out over here. So both the products, my product and my competitor's product, are intended to offer the same services, and their aim is to simplify the life of users. So, after looking at the characteristics above that I just discussed, we can say that it is going to be a price sensitive market. Since our major competitor is offering the same product to the same customer group at relatively the same price. So, if both the things are the same, then the price is going to be a factor that the customer may think about when he's purchasing the product. So, focus here has to be developing our brand and efficient production to maintain good margins and sustain any price war that is started in the market. So, I'm just trying to give you the market overview of this particular segment. So, keep this in mind. So, like I said, the another feature of the YP Vox system is that if a new smart television was purchased, there was every chance that it could be recognized by YP Vox. When it was first switched on, you can simply add it to its open source system, and you'll be able to instruct the speaker to switch on, switch off, change the channel on the smart television. That is possible. So, giving you simple characteristics which you very well know about, but still it's important for us to go through because it's part of the pre scene. They're telling us that the YPVox system benefited from the fact that smart devices were being developed by many third parties. If there were no smart devices in the market, what would the smart speaker connect with? So, in our industry analysis, we've already learned that the smart homes market as a whole is one which is really growing, is one which is really expanding at a rapid pace. So the entire smart homes market is growing, and there are bound to be various synergistic opportunities for many players in this market. For a very simple example, Dronco's smart electrical adapters are intended to be operated by a smartphone app, but they can be operated by YP Vox as well. So we have also noted this opportunity and incorporated the same, because we spoke about this same thing in the first part, at the end of the first part rather, when we were discussing the characteristics of a smart speaker, and they mentioned the characteristics of Frinter's speakers as well. So like I said, you should be very sure about part 1 before you move on to part 2. And to summarize this part, it is very clear that it's a situation called as brand competitors or brand competitors. Why? Because over here there are two companies, it's the same product, same market, same type of people, but it's a different company only. So it's the only difference between the two products will be the name of the company, the actual standing of the company, and that is a situation called as brand comparators. So comparator analysis in this market, seeing what my competitor is doing, seeing what my competitor sees at the next step forward, will be important. So your external market analysis, part of E2, and comparator analysis will become key here. Up until now we were only speaking about YP Vox's speakers. We now are looking at Frinta's smart speakers, which is called Frinta Friend. Now we have already spoken about some of the characteristics of the Frinta Friend speaker when we were being introduced to the smart speakers market in part 1, towards the end of part 1. But now they've decided to repeat some of those things under this subheading here, so it's my job to explain it. So we'll begin. Now, Frinter's entry into the smart speaker market was inspired by YP Burn. So we are pretty much copying our competitor. What they did, we saw as an opportunity. The most immediate reason for this was that YP Burn's speaker could operate Frinta's smart heating and ventilation controllers. Now, we operate an open source network, which means any smart device can be connected to our heating and ventilation controllers. So, what YP Burn's speaker could do is the speaker could connect to our controllers and people could simply use it. A secondary reason was that Frinter wished to diversify its product range, and it was clear that YP Burn's smart speakers had stimulated demand for such devices. So, first and foremost, we did it because another competitor's product could control our controllers. Secondly, we did it because we wanted to diversify our product range, as we saw this as a big market. Frinta's board viewed the fact that YPVox could control Frinta's smart heating and ventilation controllers as a threat. This was viewed as a threat, which means our board of directors or our company carried out an external market analysis or a competitor analysis and figured this out. So the board is aware of market developments and shows we have an active market analysis system. This is our comparative advantage. We are always on the lookout for threats, opportunities, because it can be seen from our entering the smart speakers market. Frinter's heating and ventilation controllers are more expensive than other brands, but they sell well because they are attractive and easy to operate. We already know that. The emergence of smart speakers that can operate heating and air conditioning controllers makes it possible for builders to buy cheaper control systems. So, when smart speakers came about, they easily can now operate any heating and air conditioning controller. So, why go for an expensive controller? So, this is a big threat for Frinta's market, right? So, technological innovations lead to opportunities as well as threats. This new innovation, which is the smart speakers, is a real threat for Frinter's controllers. This is one example of a threat arising because of technological or new product advancements. These need to be visually attractive because there is no need to mount them where they will be seen if they are operated by Wi-Fi signals. So up until now, Frinta made controllers that are visually appealing and make the life of people using it better. But now if you can control it with a speaker, just put the controller anywhere. It doesn't have to be seen and it doesn't really matter. So it's a big negative aspect for Frinta's controller. So this was a big threat. We noticed it and we decided to enter this market. Frinter's initial intention was to create smart speakers that was to be sold as an accessory for its heating and ventilation controllers, which means when we thought about this, we thought that we'll sell this speaker as an accessory with our ventilation controllers. So if somebody is buying my ventilation controller, we pitch them the Frinter smart speaker as well. This device will be compatible with existing controllers and would offer greater versatility in terms of operating heating and air conditioning systems. So it was a good new product that we got to the market. Now, Frinter's research and development department had purchased some YP-Vox smart speakers for investigation and had found that they could not replicate all of the functions that a user could input from the Frinta app on their smartphones, which means this new smart speaker was not really made for Frinta controllers, right? It was made for universal use. So it was not able to replicate all of the functions that the Frinta app currently offers. And we came to know this because we bought competitor products from the market. We reverse engineered it, which means broke it down step by step to understand what the product was. And then we figured out that, okay, it has some lapses as well. So this is something that we should really open our eyes to, and we are able to do it because of our good market analysis. So reverse engineering or competitor product engineering was practiced by the company, and it was noticed that not all functions were as smooth as possible using the Frinta app. This could harm our reputation, and to avoid the same, it was a good decision to sell Frinta Friend as an accessory, staying true to the values of making lives easy for our customers, because we want everybody to use all the functions that we have to offer as part of our Frinta app. And that was only possible because we started selling Frinta Friend as an accessory. The initial brief for the design of the Frinta Friend smart speaker was to design a device that could employ all of the functions of the Frinta smart heating and ventilation controllers. The addition of Frinta Friend to the product range would protect the dominance of Frinta's heating and ventilation controllers at the luxury end of the market. So we want to maintain our position of dominance in the controllers market. We don't want to lose that, and we'll do anything that we have to, and we'll go as far as introducing a new product in the ecosystem to make sure we have that standing. Frinta was also keen to develop smart speakers because demand for smart heating and ventilation controllers had matured, which means it has reached a stage where the growth has become very, I'll say, little or stagnant. This is a clear indication that the industry or the market segment that you are in right now has got to be something that you are looking to expand. Otherwise, your company is going to become stagnant. So Frinta has to be on the lookout for new markets, new products, to make sure the company maintains its rapid pace of growth. There is so many opportunities available in the smart homes market. If we were able to make the smart speakers, we can start to think about other smart products as well. So this means we will need to look at new and developing markets to increase our business. Product development, market development is an opportunity which we must really keep our eyes out for. So just to keep in mind from your P2 syllabus, the life cycle of a product life cycle, which is part of your P2 syllabus, needs to be kept in mind. What happens in the maturity stage, what comes after the maturity stage, what to do to make sure we can enter the market, or expand our market in such a way that our company has an upward trajectory. Also, you can think about the Boston Consulting Group matrix over here, the BCG matrix, analyzing which product is in which category and how we can better those products, how we can make sure we stay in the market for longer, is something that you have to think of. So on this page, think about the product life cycle, where your product is, where the controller's product is, and also think about the BCG matrix as to which product falls into which category. That's an exercise for you to do. Pause the recording here, make sure you view this, make sure this is something that you work upon, and then you move on. So an important characteristic we were introduced to is that this market is in its maturity stage. Really think about the product life cycle and the BCG matrix. It's a clear case of your product being in the maturity stage. All you have to do is focus on the characteristics in your syllabus. What happens in the maturity stage? What can your company do? What are the opportunities? Think about that. Let's come back to the pre-scene. There was a steady demand from house builders and for replacements and upgrades to existing systems. But Frinta had already met most of the demand from that market. We were already met that demand. There is no new surges in demand that are happening. Frinter's board was keen to find a suitable product that it could develop in order to stimulate growth. It wanted growth. The management, the board wanted growth. Smart speakers were considered a suitable product for development because they were intended to be simple to use. A key consideration in Frinter's approach to design. Our core values should always be the same, to make people's lives easy, and the speakers fit this category. Frinter's approach to making heating controllers had also given it experience of making electronic items for use in the home that were attractive to look at. So since we are able to make this new electronic item, which is a smart speaker, it gives us opportunity to look at various other electronic items that fit in a smart home. So we can start to think of new products that deliver similar synergy. Think of other electronic items that have a good development opportunity in the smart homes market, something that Frinta can look to once it has become established in the smart speakers segment. Frinta's R&D department was instructed to design a smart speaker that fulfilled the following criteria. First, it should be an effective means of operating our heating and ventilation controls using voice commands. Second, it should offer additional features for organizing users' personal lives, like internet searches, online shopping. Printer's R&D was instructed to deliver design that was better than YP1's YP Vox smart speaker in terms of hardware and software both. We want it to be better than them. The design team decided to base Frinta Friend's operating system on the software that was already in use in the company's smart heating and ventilation controls. It is something that we are already using, the open source system. It was easier for us to implement this, and there were no huge costs to create a new system or run two systems together. So there was no change in systems. It was the same system that was using the same software made it easier for us. It gave us more flexibility in terms of voice control. It also assisted in the development of superior performance of a standalone smart speaker. So it was a good decision at the end to use the existing software system that we have. At the end of the day, this was a new project which was well executed, as our speakers have done well in the market. They're established in the market a little bit. This means that project development, project management would have been done very well. This brings your E2 topics from chapter 9. Your feasibility analysis, project management, project constraints are topics that we must keep in mind, because there can be easily an exam scenario where they're telling us that we've taken on a new project to make smart bulbs. How will we manage this project? What do you think the project constraints will be? If you have that knowledge from your syllabus area, you'll be able to replicate it better and write answers that fetch you better marks. So at every stage, I'm trying to take you back to E2, P2, and F2 topics, which is very important. And you must make a list of these topics, or you must keep these topics in your mind. Pause the video, go back, look at the topics, or complete the video and then go back and view the topics. It's up to you, but make sure you address it. Make sure you don't leave any explanation unheard, or don't listen to any advice that we give. It is at the end of the day made to help you understand better. So using our own software was easier for us, was better for us in terms of compatibility for our own products. But the choice of software meant that Frinta Friend was less suitable for use as a universal controller, which means people would only buy it generally if they have our heating and ventilation controllers. They're not going to buy it just for the use of it being a smart speaker, because it was not very suitable, not very compatible. So since our main market is maturing, maybe we can look at this as another strategy, come up with a new speaker that is used as a universal controller. It is possible, right? Because right now we have Frinta Friend, which is supporting us being the leader in the controllers market. Why not come up with a new device that is universally controller? So develop a speaker that works more as a universal controller. This obviously has to be another subline or a sub brand, so it protects our current market and strategy. But it's something that we can look at as an opportunity, and that may help our company fly. Frinter's design team programmed the ability to update schedules and lists on smartphones, and the ability to control Dronquo's smart electrical plugs into Frinter Friend. So Dronco is another company that makes electrical plugs, and that system was, controllable from Frinta Friend. We made that as a active choice. Those were the only third-party products that could be managed by Frinta Friend when it was launched. Frinta's board believed that consumers would be prepared to buy Frinta Friend because of its build quality and the excellence of its AI, and would not be unduly concerned about integration with other manufacturers' smart devices. We believed that people are just going to buy it because it is better and because it supports our product. It was not made as a universal controller. Most smart products are designed to be operated by users' smartphones, and so Frinter's board believed that users would have little need of the ability to use other devices from a smart speaker. Frinter launched its first Frinter Friend smart speaker in 2016. So YPVox introduced its product in 2014. So for 2 years, it was unopposed in the market. Frinta only launched in 2016 the smart speaker. And then we've added updates and upgrades whenever necessary. So in this market, we always know that new updates and software changes will be important. We may need a dedicated team for the same. So app management, app running costs to be taken into account along with software expenses. This is something that we'll have to take an account for when we move later into the financials. Frinta and YP Burn are the leading manufacturers of smart speakers worldwide. So, since our launch in the smart speakers market, it's been about 5 years, we have become one of the leading manufacturers. YP Burn remains the larger and more successful in this market, approximately 60% market share by revenue. You can see out of 10, 6 people are choosing their products. People want to go for their products because they are larger, more successful. They've been in the market for a longer time. So, our major competitor is YP Burn in this segment. Our Frinter's Friend speaker is in three models. The first one is Frinter Friend Classic. So this is the most popular device. It has a large and powerful speaker and is intended to look good on a table, desk, or shelf. So it's our most selling device, and as always, true to the theme, true to the values, it's intended to look good. Then we have a Frinta Friend Mini. So the mini speaker offers all the features of the classic, but it's a smaller device. The mini speaker is a little smaller than the one in the classic, which reduces the sound quality a little bit. And obviously, the mini costs less than the classic. Then we have the Frinta Friend screen, image of which is in front of you, just an image representation. So the screen is larger than the classic and has a video display. It has two speakers built into the case and it has obviously better sound quality. The screen model has a camera that can be used for video calls either to another Frinta Friend screen within the same home network or remotely over the internet. It has extra features as well. A photoelectric cell controls the video display's brightness so that it can be used in a bedroom without keeping the occupants awake with a bright display. So the nature is innovative. Everything has been kept into mind when it's been designed. All three models offer the same basic operating capability, which means the software, the operations are pretty much the same. Some users own a single Frinta Friend while others have several. If there is more than one, you can mix and match and all of them can be connected to each other. The devices are easy to install and use. If the owner buys a single device, then it will set itself up, asking the user for specific information such as password and Wi-Fi connection. If the user adds more devices, then the existing Printer Friend will detect the new smart speaker and automatically set it up. So multiple Printer Friend speakers can be connected to each other, which is also good and an innovative offering that we have taken into mind. The Frinta Friend is sold as a consumer product through retailers, both physical and online, who specialize in home electronics and entertainment systems. So up until now, our Frinta controllers, the heating and ventilation controllers that we sell, were not sold through any retailers or directly to the public. This was something that we used to generally market to big home builders who would use our products. But now, because it's Frinta Friend and it's only specifically used when there is a Frinta controller in the picture, because it's been designed to specifically serve the Frinta controller rather than be a universal controller, we sell it through retailers as well, which means you can buy, let's say you got the Frinta controller fit into your house when you bought it. If you want something extra, you can buy the Frinta Friend from a retailer as well. You have that option. So it's a new sales channel that is available. That is something that is new for us as well. But I'm seeing an opportunity over here to make these Frinta Friend speakers a sales opportunity to any normal customer as well, because at the end of the day they are speakers. It might not be able to be a universal controller, but it will still be a smart speaker and it will be able to control certain aspects, and the voice quality or the sound quality is going to be good because of our quality and because of our background. So it can be something that we can market directly or say or sell it directly as part of an in-app purchase or on website purchase, which our customers can buy directly from us. Having direct contact with customers is a great ability and a great opportunity for a business to understand what the customer really wants, what the customer is trying to do. So having that in or direct sales channel with your customer can be a possibility specifically for the Frinta Friend speaker. So something for you to think about. So we discussed Frinta's products up until now. We went into that detail. But now we are focusing on Frinta's operations. How is the company actually run? So Frinta has a factory in Westland's Central City that manufactures controllers for heating, hot water, and air conditioning systems. So first of all, we own a factory. So this will show on our property, plant, and equipment statement. This means that in the future, if we decide to grow or add new products, we may need another factory as part of expansion. So just an opportunity or a scenario to think about, like if we looking to expand, if we look to increase our products or product offerings, we may need another factory, and for another factory you need long term finance, you need to take into account cost of capital, or you could take into account leasing. All of this is part of your F2 syllabus, so this can be a realistic scenario that we think about. The factory is located in the industrial zone on the city's outskirts. Frinta's head office is located beside the factory. Frinta has been located in Central City since its foundation, so it's been here for a very long time. Initially, it occupied a small factory unit. By the year 2000, it had moved to its present location, a large and modern electronics factory with a purpose built head office in the adjacent building. So, first and foremost, it's a large and modern electronics factory, which means it will have certain technologies, robots, or any new modern manufacturing techniques, which is important. Now, modern manufacturing techniques have been spoken about more in your P2 syllabus, such as JIT, TQM, Kaizen, incremental improvement, use of robots, use of technology. This is something that this line draws to. Frinta has a second factory in Tech City located in Westland, 90 miles south of Central City. It's in the same country but 90 miles south. The Tech City factory is used to make Frinta friend products. It's specifically for making your smart speakers. The location of this factory was chosen because many electronic companies are based in Tech City, and Frinta's board believes that it is desirable for the company to maintain a close relationship with the manufacturers whose products may be compatible with the Frinta friend, which means Frinta friend is compatible with Dronco. So it's a good opportunity for us to work with Dronco to come up possibly with new products which can be used in the Frinta friend ecosystem. So this is what the company believes, this is what the strategy is, and I think it's a good approach. Also, this means that the company is actively looking for new products or new avenues to grow its market share. Moving on, Frinter's R&D facility is based in a large building that is adjacent to the Central City factory. This tells us that the R&D department is something that we have heavily invested into, something that we are actively investing into, because it's a large building, and it can only be a large building if you are looking to support it, looking to invest in it, looking at it as a value adding function of your organization. So R&D is going to be important, and this brings in your intangibles IAS 38 from your F2 syllabus, something for you to think about. They may say we are filing a new patent. How will we account for it? How will we take it into our books? You will be able to better explain it if you've done your F2 syllabus, intangibles IAS. All of the company's research and development is located here because the board is keen to make the best possible use of synergies between the major product ranges, which is controllers and smart speakers. We want them to be as amalgamated as possible. The head office staff are split into five main departments. There's production, there's marketing and distribution, there is HR, there's finance and admin, and then there is R&D. Frinta does not have direct sales channels for any of its products. We spoke about this as an opportunity on the previous page with Frinta Friend. So, an opportunity to improve this vertical integration can be beneficial for companies in terms of incorporating customer demands and better efficiency. In short, knowing your customer better. So, for Frinta Friend, really it's an opportunity for us to get to know our customers better. Now we come to a very interesting line that they have presented. They say that pricing decisions, including any discounts, are made by the board, which means the board makes the decisions at the top and then everybody simply follows it. which means the management or the managers are not given any real responsibility. They just have to follow. Do you think they'll be motivated? I question this. So looks like a top to bottom organization system. The board leads the decisions and the others simply follow. For such an innovative and market leading company, this decision making process would be seen as primitive. It has its advantages, yes, that the board is able to control better, they understand the market better, but this is very conventional. New, more effective methods are being used by companies in the world. For example, the concept of responsibility accounting. Why don't we set up cost centers, revenue centers, set them up as responsibility accounts? For example, as we go deeper into the pre-scene, we'll figure out the structure of our company. Why don't we make one aspect, let's say sales, the sales director, let's make it a cost center, just an example I'm giving. And then the sales director or the sales manager will be responsible for everything that happens under that department. He will be responsible for the costs, he will be responsible for the decisions, and if something goes wrong, you can hold him accountable. This gives the manager so much positivity, so much motivation to work in the right direction because he's leading his department. Yes, the board can be used for oversight. The board can be used for, I will say, final discussions or final suggestions. But them making all the decisions and the others simply following is pretty conventional and not a very participative system, which is what really works in this modern environment. So the concept of responsibility accounting, which is part of your P2 syllabus, is very vital and something that we must revise. Also, let's keep in mind the different marketing based pricing strategies, which means as of now, we are charging a little bit higher than our competitors. We are premiumly pricing my products. What are the other strategies which are available? Market skimming, price penetration. We're not using it, but I just want you to be aware of it. Same way, pricing techniques based on cost from our P2 syllabus must be kept in mind. Can we use the target costing method? Can we use the cost plus pricing method? We are not using it right now, but these are just syllabus areas which we must keep in our mind because they can easily become exam scenarios. So it's better to be prepared. And as we already know, P2 is a very important pillar for this exam. Moving on, we come to a very important aspect. Please pay very clear attention here. We come to the costing aspect, specifically looking at the smart speakers only. Now, if you look at the theme of the pre-scene itself, you will see that they first started by telling us what Frinta does and what Frinta used to do and what is doing right now, which is making controllers. Then they moved into smart speakers, and most of the pre-scene is dominated by smart speakers. This clearly tells me that the company is more and more focusing on the smart speakers area because the controllers market has now reached its maturity. Something, a trend we should keep in mind, right? So coming to the costings now. If you look at the costings, it's pretty standard. If you were to just look at it, you wouldn't analyze it the way I'm going to analyze it, because it simply tells you how much each part costs. But the important thing to keep in mind over here is if you add all the material cost, which means microphone, speaker, camera, buttons, and sensors, and packaging, and all of that, the total parts and material cost comes up to be over 80% for the Frinta network heating controller. Out of the total selling price, 80% is, sorry, out of your total production cost, correcting myself, out of your total production cost, 80% is the material cost for Frinta network heating controller. For the Frinter Friend Mini, the material cost is 68%. For the Frinter Friend Classic, it's 70%. For the Frinter Friend Screen, it's 75%. So what I'm trying to do over here is tell you that majority of your cost is committed in buying the material or sourcing the material itself. Now, analyzing these material costs and trying to reduce them while we maintain our quality is key, is very important. So how do you make sure you have better relationships with suppliers? How do you make sure you use supplier relationships part of your P2 syllabus? Again, something important for us to keep in mind. So material is making up majority of your cost, but what is the other 30, 22 percent, or the 25% of the cost in different scenarios? What is this other cost? This other cost is the labor and the overheads cost. Now, if I look at the costing card or the cost card that is presented to you, they've just simply grouped the labor and overheads in one section. This tells me that it's a very straightforward costing system, which means they're not distributing or they are not dividing what are the overheads, how are the overheads charged. None of that is present. They've simply grouped it into one section, which means rather the overheads are based on the number of labor hours. If that is the case, then it directly points me to an absorption costing system. And for a big company like ours, which is progressive in its thinking and produces different kind of products, understanding these overheads has to be key, because they are at least 20, 25, or 30% of your cost. So understanding these overheads should be key. Over here, they've simply grouped our labor and overheads cost into one line, showing that we are not analyzing our overheads. This looks like a standard and traditional absorption costing system that is in place. No details have been given to us. So this system has its flaws, and this is where your P2 syllabus comes into place. Your costing systems comes into place. A change to activity based costing can definitely be an exam scenario. They'll tell you that my company is now thinking to move to activity based costing. Do you think it's possible? You'll only be able to write this answer if you have good P2 knowledge. So your absorption costing, marginal costing, activity based costing knowledge has to be impeccable, specifically activity based costing. So go back to your revision notes, and this is the time where you analyze this as a key topic. Also, the target costing method is something that you can keep in mind. It's also an exam scenario that can come up. So from this costing card, we were able to analyze this. Spend time on this page before you move on. On the next page, I'm looking at Frinta's management structure. If you look at the structure, you will see that David Wine Jones is our chief executive or CEO. Under that, we have different departments, which means Asma is looking at production. Alcine is looking at distribution and marketing. Taras is looking at finance. Petunia is looking at HR. Narendra is looking at R&D. So clearly there are departments or divisions that are present. This clearly tells me that it's a functional group structure. Seeing the images above, we can say that a functional structure seems to be in place, where similar activities are grouped together and there is a degree of specialization. Everything related to HR happens under Petunia's outlook. Everything under finance happens under Taras's outlook. So it's very specific, and degree of specialization is sought. This is generally recommended for smaller sized organizations who work in a stable environment and do not offer many different kinds of products. We have different controllers, different speakers, we have that option. And we are not a small organization anymore. And we are also not an organization that works in a stable environment. So this can be something that we have already outgrown, and this could be one of the reasons why the company is already in its mature stage for its most selling product without thinking proactively and without introducing new products. It could be because of the structure, because this structure has its own limitations, like it takes time to make decisions. There can be conflicts between departments. Everything has its benefits and limitations, but we analyze it from my organization's perspective. In the future, yes, it could be an exam scenario where they ask you to analyze if a divisional structure will be good for us, if a matrix structure will be good for us. This is our E2 syllabus again. But keep in mind our current management structure and how it works. If you look at the structure, clearly it's an indication of a functional structure in place. Now, Frinter's board also includes non-executive directors. So we have 6 executive directors, 1 CEO, and 5 other directors. Same way, in the non-executive section, we have 1 non-executive chairman, and then we have 5 other NEDs, non-executive directors. So if I look at the overall structure of the organization for a listed company, we can see that the corporate governance code, part of your F2 syllabus, has been honored in terms of balance of the board. The code says, the UK corporate governance code says, there must be equal number of executive and non-executive directors. We have adhered to that for the good running of a company. The roles of the CEO and chairman should also be separate, and yes, we have adhered to that as well. The only thing I want to look at is there is no mention of the audit committee, remuneration committee, nomination committee, or the risk committee. These committees do not exist, and we must look to set them up according to good corporate governance for listed companies. Otherwise, the board is balanced, but the miss of these 3 committees that I mentioned should be looked at, because this can be something that we introduce going into the future to make our board even more strong and to make the governance or the running of the company better. So, food for thought, F2 syllabus straight away. Next subheading we are now looking at is Frinter's business model. If you look at the model, they've given us 4 rectangles that drive into one another, that correspond with one another, that we'll look at. So the first thing for any company is defining value. What is its core values? So for Frinta, it aims to simplify the lives of end users by developing products that are sophisticated but easy to use. This it has defined. Then how does it create this value? It creates this value through innovation in hardware and software, and through manufacturing its products which are well constructed. Now these are our core qualities. We always have to be innovative, we always have to manufacture products that are good quality. So keep this in mind whenever you are suggesting anything. Next, how do we deliver this value? We deliver this value by engaging with the makers and wholesalers of heating and ventilation equipment, and with major retailers of home electronic products. This is how we sell our products. Firstly, for our controllers, we maintain good relationship with heating and ventilation equipment sellers or big house or home builders, and we sell our speakers through retailers. How do we capture the residual value? How do we do something extra? Frinta offers premium products that are priced to reflect their technical superiority and their build quality. So we charge extra. It's the premium pricing model that we are using. Now, looking at this, defining value, creating value, and all of that, it takes me to my P2 topics of value analysis, value engineering, and the Porter's value chain. This is something that you must revise. Frinta is always focused on quality and ease of use in the design and manufacture of its products. So, this is something that again is our core value. We always have to be true to it. This is true of both of its controllers and smart speakers. Whatever we make, it's quality and it's innovative. As we already know, Frinter was founded by a plumber who believed that the company's initial success was attributable to continuing innovation and improvement. So, from the beginning, that's been my core value. For instance, the market for smart heating and ventilation controllers is mature, but Frinta continues to innovate, make controllers that are easy to use. Plumbers and builders often specify Frinta controllers as their preferred choice to put in a house. Frinta smart speakers continue in the tradition of the heating controllers. The Frinta Friend can be set up in minutes. Frinta invests in manufacturing equipment and good quality materials, because this is showcased in our premium pricing policy. Frinta invests its manufacturing equipment in such a way that it always will give good quality. That's our core value. And feedback from consumers indicate that Frinta's products inspire confidence. Frinta's experience in the manufacturing of heating and ventilation controllers has frequently involved working with manufacturers of central heating boilers, air conditioners, and radiators so that our controllers can be better integrated. We don't make the products, we don't make the components, we only make the controllers. So we've been in regular touch with our, I'll say, market helpers or market suppliers so that both the products benefit. And this is something that has been showcased again in our core values. Frinta also collaborated with Dronco in order to enable Frinta Friend to switch devices plugged into a Dronco electrical adapter on and off. So we are working with more and more partners in this smart home industry so that people use our controllers and know about our new smart speakers. Frinta products are marketed on quality and functionality. These are so what we are explaining here is simply the core values and the functions of Frinta. You must keep this in mind carefully. After I have explained it in my own words, just hit the pause button and read it through your by yourself in your own words. Helps you retain it better. Next, Frinta's heating and ventilation controllers are relatively expensive in comparison to competing brands. We already know that. Frinta's only major competitor in the smart speaker market is YP Burn. This is the only major competitor. We have to tussle with them only. The retail prices for both the company's products are comparable. I also told you this. It's a brand competitor. Two companies offering the same product to the same people, just a little bit different in their offering, is brand competitors. Neither company actively aims to compete with the other on basis of price, which means a price war is something that is unlikely, but it can happen. Rather, both companies are focusing on quality, giving something extra, giving something new. So to stay ahead, you will obviously have to innovate, obviously have to give something new and extra so people choose your speaker rather than the YP Burn. This is giving you the characteristics of the market as well. Now we move on to a very important part of the case study, which is also, I like to call it, the third part of the pre-scene analysis, which is the financial analysis. So the first part was introduction to the company. The second part was where we understood the workings of the company in a lot more detail. And now the third part is when we actually look at the financial side of the company. We look at the ratios, the position, the statement of profit or loss, the statement of financial position of the company, and we analyze it one by one because that will help us to understand the deeper status of the company, the standing of the company, and the position of the company. So let us begin. The first thing that you are now seeing on your screen is the Frinter Group consolidated statement of profit and loss, which means, first and foremost, it's a consolidated statement, which means there is more than one company, there is a parent subsidiary relationship somewhere which they have not mentioned to us, but because it's a consolidated statement, it means it's an addition of the statements of all small subsidiaries that we may have been owning or we may have owned from a time, and that is why it's a consolidated statement. And this takes us directly to our F2 syllabus in the consolidated statements chapter, which is towards the end of your F2 syllabus. But for you to understand very clearly that this is a syllabus area that you must revise, you must have knowledge about. So without further ado, let's look at the numbers then. So if I look at the numbers, I see that the revenue is 820 million this past year. So it's a very big company, first and foremost. And secondly, the revenue has increased slightly from 2019. The cost of revenues, or the cost of sales, if you want to put it that way, has also gone up. Gross profit gone up marginally. Admin expenses have declined. Selling and marketing expenses have also declined, and that is why the operating profit had a small increase. Finance costs have remained the same, and there was a little bit of a higher tax that was paid. So, if I look at the overlook of this statement of profit or loss, it clearly tells me that the company is huge. And secondly, the revenue is very large. Thirdly, it tells me that the ratios from the previous year, which means from 2019 to 2020, have only slightly increased. They've not gone up in a huge proportion. So that again tells me that my market that I'm actually part of right now is mature, and that has been explained to us in the pre-scene itself. So what we did is we furthered this statement of profit and loss and presented it to you in this ratio or simple percentage way that helps you understand the company even better. So we gave you first the absolute numbers, we looked at the absolute numbers, and then we got you to our statement of profit or loss analysis that is on your screen. So if you see, the revenue has increased by 6%, not a major increase, I will say. Cost of revenue has gone up by 8.6%. The increase in gross profit margin went up by 2.3%. So overall, the company saw a negligent increase in gross profit margin by 2.3% in the current year, which is not very, I'll say significant. It's not something that the company can be very proud about. I'll put it that way. The admin expenses and the selling expenses have decreased in the current year. So maybe there were not many opportunities for us to market our products because the market is already in its maturity stage. That can be possible. The increase in operating profit turned out to be 6.5% because your selling expenses, your admin expenses have gone down. So, yes, the operating profit is positive. The finance cost, there is no increase, which indicates that the company didn't borrow any funds or repay any loan. It remained the same. If you look at the profit before tax, it went up by 6.9%. Again, not very significant, I'll put it that way. The effective tax rate increased, which suggests that the company could have done more business in a country that has higher tax, or overall tax might have increased in the host country. So first and foremost, one reason for higher tax is because your revenues are higher. Second reason could be that you have done business in a country where the tax rate is high, and then it was consolidated. So overall your tax rate has increased. I'm just thinking about why it could have increased. Your profit after tax and operating margins are pretty much the same. They have not really changed. So you can see that the company is entering into the stagnation stage. It's pretty much where it was. There is not something new, not something innovative, not something new, huge that is happening to propel the company forward in the future. You will also see that I have put certain numbers in underlines in red. Why have I done that? First and foremost, it makes it easier for you to remember. Second, when you are writing a case study style answer, when you are writing your mocks with me, let's just say that you are writing anything about revenue or expansion, you can just start your answer by saying that our revenue has increased by 6.3%, which is not a significant increase, and hence we must look at other ways of diversification and growing the company. If you start your answer that way, then the examiner clearly knows that, okay, this person has analyzed the pre-scene, this person has gone through the pre-scene, has spent the time. So we are doing this analysis for two reasons. First, to help you understand the company's standing as of now. And second, so that you can use some of these numbers when you are writing answers, when you are writing your mock papers. And that is why trying to remember revenue, trying to remember operating profit can come in really handy and can add value to your answer overall. So remember why we are doing this. On the next page, they have given us our statement of changes in equity for the year 31st December again. If you look at the statement of changes in equity, it will first and foremost tell us our share capital and share premium. It's a listed company, which is 800 million. The retained earnings that were carried on from the last year are 671 million. Your profit for the year was 158.9. And if you see, out of that profit, 128 million was paid out as dividends. So out of the profit, your dividend payout ratio is 81%, which clearly means that majority of the money that your company is earning is paying out to the shareholders. Yes, that can be seen as good, because shareholders want to invest in companies that give huge dividends. But if I look at it from the company's perspective, it's something that doesn't really sit well with me, because out of the profit, majority is paid out as dividend. So the company is not keeping anything with itself, and the company is not reinvesting anything in the business. If you earn a profit and if you pay it out, meaning the company doesn't have any plan of what to do with that money, otherwise you wouldn't pay it out, right? If the company knew that I have to buy a new factory worth 80 million, I cannot pay out that dividend. So this clearly tells me that the company has entered the maturity stage, which we know. The company is not looking to innovate by just looking at its dividend payout ratio, I can say that. Because if you are investing in research and development of a new product, if you are investing in a new product line altogether, you won't pay out 80% of your profits, right? So this is something that I'm looking at skeptically about the company, and it tells me that the company does not have any new plans or projects in the pipeline, because majority of the money is being paid out. So if I look at the innovativeness of the company, I will question it. When we know that our product is in its maturity stage, our major product is in the maturity stage, and our new product, the smart speakers, has become a good revelation, but still we need to push it. We have more opportunities. Why not invest the money there? So something for you to think about and know about the company. After this, we are looking at our statement of financial position. Again, this is the consolidated statement that we are looking at. First, we look at the absolute numbers as always. So if you look at the absolute numbers, your property, plant and equipment went up by a little bit, not too much. Intangible assets went down, so maybe there is amortization that you need to think about. Some of your intangible assets may have become obsolete as well. That can be a situation. So something for us to think about. For current assets, we have inventory, which has gone up a little bit. Trade receivables gone up a little bit, and our cash or the bank has gone up a little bit. If I look at the inventory, it clearly tells me that we do not have any modern manufacturing systems in place like JIT or like TQM, because those systems do not encourage any inventory. They see inventory as waste. So if I take this back to my P2 syllabus, it tells me that my company is not having any modern manufacturing systems, because I can see inventory over here, which is huge, 41 million. So if we are holding this inventory, what is the reason behind it? And is there an opportunity for us to move into modern manufacturing systems? Something for us to think about, something for us to just, have in our mind as a thought. If you look at equity, share capital, share premium remained the same, which means no new shares were issued in this year. We did not need see the need rather to raise any capital. Retained earnings has gone up. The borrowings has remained constant. Trade payables went up a little bit, and the tax has also gone up a little bit, which we already know. So these are the absolute figures that we are looking at, and I related each part to our syllabus areas. Intangible assets related to F2, inventory related to P2 in terms of modern manufacturing systems, share capital related to F2, your long-term finance. Those chapters should be coming into your knowledge right now. Same way we gave you the profit and loss analysis, we'll give you the statement of financial position analysis. First and foremost, the most important metric for any company, or to judge the profitability rather of the company, that investors generally look at is the return on capital employed, because it simply tells you how much money you've invested and how much return you got on that money. So the ROCE of our company is pretty decent. The return on capital employed shows how much a company is able to earn on the capital employed by it in the form of debt and equity. From the table, it can be said that the company makes around 12% of the amount employed by it. So if you invest $100, you get $112. That's your return rate as of now, which I will say is pretty decent. 12% is a good return. So for investors, our company is going to be one which is quite revered or quite looked at, because first and foremost there's a good return, and second, we are paying high dividends. If you look at the non-current asset turnover, which is an important ratio as it tells us how much a company earns revenue per $1 investment in non-current assets. So if you see my non-current asset turnover, it's not that great. It's 0.5 and 0.48. So it's gone up a little bit from the previous year, but still scope for improvement. Same way, there is the current ratio. If you look at the current ratio, it shows the liquidity position. So the current and the quick ratio give us the liquidity position of the company. Ideally, a ratio of over 1 indicates that the company will be able to fulfill its current obligation by selling its assets. So current ratio of generally 2:1 is sought after. So two parts asset, one part liability, so that we can say that we are somewhere in the mid range. It's something that is, I'll say, the current assets are covered, are covering most of your liabilities, because the ratio has gone down a little bit, but still it's in the mid 1.5 range, so that's okay. The quick ratio also has gone down a little bit. The liquidity position is still good, even though there has been a slight decline in the current year, still good. Return on assets, on the other hand, has gone up slightly, as you can see. Your receivable days and payable days are quite low, which means that customers pay their dues pretty much on time. We pay on time and we receive on time. So, my thought is, are we using the maximum benefit in our payable days? Are we paying in, let's say the paying policy is 60 to 90 days, so are we paying early, which means is our working capital being affected? I'm just thinking from that scenario. So think about working capital here and how we can better manage the working capital. One very important aspect I want to bring about is the gearing ratio. Gearing has remained the same because no new equity was issued and no new debt was taken on board. It remains the same, but I see that out of the entire picture, a very little financial leverage ratio is being shown or showcased, which means that the company is majorly using equity to finance, to run the company. Why is this? From our F2 syllabus, we very clearly know that debt is cheaper than equity. Out of my entire 100%, only a small part is financed by equity. All the other part is financed via equity financing. So why is this? Debt is cheaper than equity because it is tax deductible. So why is my company not using debt? I would say that an appropriate, if we have to invest in a new project, or if something new comes up, we require capital, the only way to look at it would be borrowing more, would be looking at debt, because debt is cheaper than equity from the cost of capital perspective. We already know it, and our company is not harnessing the full potential of it. A very small percent of your financing is done via debt. So we need to keep this in mind. We need to make a clear picture of this, and just take it into grasp, so this is something that remains with you when we go to mock questions. On the next page, then they've given us some segmental analysis to understand the segments that we deal in. So first and foremost, again, absolute numbers is what we look at. So from 2019 to 2020, the heating and ventilation controllers, if you look at it, the revenue has dropped from 408 million, it came to 369 million. The market has matured. There are not many opportunities which are now available. The smart speakers, on the other hand, has picked up, has gone up, and that is why your revenue overall has increased from the previous year. Operating profit as well, if you take a look, you will see that controllers gone down, smart speakers gone up. So overall your margins were going up a little bit, your profit went up a little bit because the smart speakers market really picked up. And this has been further enhanced and given to you as the form of a diagram as well. So if you look at the 2019 diagram and the 2020 diagram, you will see that the smart speakers market is something that is giving you majority of your revenue now. So it should be a focus area, a focus market that you intend to improve. And this means that there are more opportunities available for your company to grow. So something for us to keep in mind. Again, we presented a analysis for you or a percentage breakdown for you to make it easier. So ratio of revenue from smart speakers has increased in the current year as compared to the previous year, where majority of our sales came from heating and ventilation controllers. You can see that in 2020, it was 45% of our revenue came from controllers. And in 2019, that number was 53%. So it's gone down while the smart speakers have increased. So to give you just a percentage understanding, this table has been prepared, but it's exactly the same explanation that I gave on the previous page. Something for us to really look at, because smart speakers has now become our prominent product, the product that is pretty much running the company, and the product that is going to have great growth potential in the coming future. Now, on the next aspect, they have interestingly given us competitor information, which means they've given us what our competitors' financial statements are. We already know our major competitor in the smart speakers market, which is now becoming our major product, is YP Burn. So, YP Burn is Frinta's only major competitor in the market for smart speakers. YP Burn manufactures smart speakers and a range of other smart consumer electronic items. So YP Burn is not only making speakers, it's making other electronic items as well, which are smart. So something for you to look at. Frinta copied YP Burn and brought its Frinta friend speaker in the market because they realized that YP Burn was doing a good job. So YP Burn is also selling other electronic items. This could be a major opportunity for my company to pick up on other electronic item sales as well. So YP Burn is based in Westland and it's also quoted on the stock exchange. Same country. Now, what I've done is I've put the absolute numbers side by side for you over here so that we can compare. Now, if you look at the revenue of both the companies in 2020, you will see that YP Burn's revenue is 1172 million and our revenue is 820 million. So it's 50% more than my company. It's almost 50% more than my company. It's a bigger company than me in terms of revenue. Their gross profit is also superior, their operating profit is naturally superior, and then profit for the year is also superior to us, which means it's a bigger company, it has economies of scale, and it's a company that is also quoted on the stock exchange. So if me as an investor is looking to invest in a company, I will analyze, should I invest in Frinta, should I invest in YP Burn? YP Burn is a bigger company and is a market leader for smart speakers. So you have huge competition from this company, and it's important to understand that its stature is bigger than ours in terms of revenue and profit as well. So what I'm doing here is analyzing the absolute numbers for you. We've done the percentage analysis as well, like you saw in the previous pages for YP burn also. So you can have a look at that in the pre-seen PDF that will be in front of you. But I am only focusing on the absolute numbers when I'm doing this explanation, because going deeper into the pre-scene, I'm going to present a comparative statement where the numbers from both of these companies are going to be compared in terms of percentages. So I'm not focusing on the individual percentages which have been calculated and in your pre-seen PDF already. By this explanation, I'm only focusing on the absolute numbers. Same way they have given us the statement of changes in equity for both the companies. We'll put them side to side, and we can see that YP Burn also paid out 81% of their dividends. And Frinta also did the same. So pretty much we are in the same range. Both the companies are pretty much doing the same. If I look at it in absolute numbers again, you will see that that could be, you can analyze rather that that is something of a market trend, something of the sort of a market trend rather. Because if both the companies which are competing with each other pay out, pretty much similar dividends in terms of percentage, it can be said that one is looking at the other and maybe following the same. But from Frinter's perspective, since we are still behind YP Burn, since we are still, not the market leader in the smart speakers market, it could be wise for us to stop our dividends a little bit, or to reduce our dividend payout a little bit, and to invest money in areas where we can actually, gain a lot of value from, which will evidently increase our share price in the longer term, and the shareholder will still be happy. But overall, the dividend payout ratios seem to be the same for both the companies. On the next slide, they have given us the statement of financial position. We have put them both side by side for you. Left hand side is YP Burn, right hand side is Frinta. Let's start comparing and picking up areas. So if you look at the areas, you will see that the property, plant and equipment investment of YP Burn in this year has rather gone down. And it's again lower than Frinta by a great margin. So maybe they're using their assets better than us. With less assets, they are able to gain more revenue than us. Maybe they use assets better than us, right? Even if you look at the intangible assets, they are lower than us. The inventory also, I'll say, is higher than us, but okay, it's not too much of an alarming situation. Trade receivables are quite high, so maybe they're giving extended credit periods. Their bank and cash is pretty much in the same range as ours. If you look at the total assets column, it's lower than us, but at the end of the day, the company made more revenue, almost 50% more revenue and profit than us. So then it clearly shows that they're more efficient in the work that they do. If you look at the share capital again, if the share capital is a little bit lower than ours, the borrowings are lower than ours, and then everything else pretty much falls into line with their policy, which is very evident from the trade receivables and trade payables. If you look at their payables, they are high. Again, they might be taking a lot more time to pay their suppliers, to pay people they're working with, or pay, for raw materials, which means they're using the maximum possible benefit of the working capital cycle. They receive late and they pay late. They're using the maximum possible availability of the terms of credit to make sure they manage their working capital better. Their revenue was higher, so the taxes bound to be higher. But overall, I can see that their borrowings have gone down from the last year, which means they may have repaid a loan and still their revenue was quite high. So maybe they're doing something that is better than us in terms of production, in terms of, just being in touch with customers and selling their products, because they have huge market share, 60% market share in the smart speakers segment, and still the assets are lower than us. So they're doing something better than us. Further competitive analysis will be key for us. Now we have presented to you the comparative financial analysis, which means we are looking at the comparative statement of profit or loss. We create this extra for our students, and it's on your screen now. It will just give you the percentage analysis of both the companies side by side. Up until now, you were looking at both companies in absolute terms. Now you are looking at them in percentage terms. So our revenue has increased more than YP Burn in terms of percentage, but still their overall revenue is almost 50% more than ours. So Frinta grew its sales at a little bit of a faster rate. If you look at other important numbers, you'll see the finance cost for us is zero. For YP Burn, it has decreased because they paid back a part of the loan. If you look at the operating profit, we've done well significantly. We've been able to control our, in terms of percentage only, we've been able to control our admin cost, selling costs, whereas for YP Burn, those have increased. So that is something which we have taken good care of. Our profit before tax, hence, was a little bit higher than YP Burn. So, in terms of percentages, yes, our company is growing, moving in the right direction, invested in the right product, which is the smart speakers, but still, there is lots of ground to catch up on YP Burn specifically because they hold 60% of the smart speaker market. Same way, they've given us the comparative statement of financial position, and I've analyzed that for you in terms of percentage over here. So if you look at the return on capital employed for YP Burn, it's close to 30%. And for my company, it's close to 12%. So half, less than half is our return on capital employed when comparing to YP Burn. So people investing in YP Burn are getting good returns, whereas people investing in my company are getting decent returns. So it is a very clear indication that YP Burn is more efficient, is using his assets in a much more efficient manner than Frinta, which we already discussed. But this is the evidence of it. The non-current asset turnover ratio of YP Burn is more than double of Frinta's. Like I said, the revenue that they're generating with their assets is almost double of what Frinta is able to do. So they're using their assets in a much more efficient way than ours. Quick ratio, pretty much the same. Return on assets is something that is a difference. Even though YP Burn paid off a huge portion of the loan, it still uses more debt in its capital structure. They're using a little bit more debt than ours. If you look at our gearing, it's close to 10%. Their gearing is close to 13%. So they're using more debt, and this also we spoke about an opportunity to use debt so that our weighted average cost of capital goes down. If you look at the numbers side by side, you really understand what both companies are doing and looking to do rather. After this comparative analysis, you will see the news analysis section in the pre-scene that is released by CIMA, and you will see the news analysis section which we have already analyzed for you and simplified for you in our PDF document. You don't have to do anything extra. You'll just have to read through the news analysis section. It's already been analyzed, it's already been summarized in my PDF document. You simply have to read it. After you have gone through that, we have completed our pre-scene analysis. We've done it. This pre-scene analysis is complete, and you will see there is so much information to take in. So you will have to view the pre-scene multiple times. It's not a one-time thing. I hope you have found this pre-scene helpful. If you have any questions, you have the community tab where you can put them up. You can reach us directly, and we'll be most happy to help you. Thank you, and we are at the end of our pre-scene analysis.